All right, so we've got some foundational concepts here, but now let's get into some really the detailed stuff, and that's the indicators. This is the tools, the things we're going to actually use to help us, make decisions around securities to buy or sell, for example. And indicators are really at the heart of technical analysis, and it's really our technical tools we're going to use to help us be successful. And indicators are all based on things like math and data and trends and all that. It's very focused on trends, of course. You want to anticipate trends and then make your decisions based on where things are headed or where the trend is headed. And technical analysis and using indicators is also all about eliminating emotion. You're not tied into, well, I love that stock, or I love that last movie from Disney, so I'm going to buy Disney stock, or whatever. I heard a great thing about Bitcoin, or whatever it might be. It takes emotion out of it, and you're really looking at these indicators from a real unemotional way. What is the indicator telling me versus my likes or dislikes about something? And that makes them very, very good to use in that manner, very way that takes emotion out. Now, they're not perfect, because nothing's perfect. If there was, I would have one lesson, and it would be about what's the perfect indicator to use, and that would be it. But they have different applications and different ways you can use them, and some work better than others, or in certain situations or with certain types of securities. And we'll go through that as we go through the course. But just be understanding that nothing, of course, is perfect. In fact, really beware of anybody who says, I've got the perfect system or the perfect set of indicators or things of that nature. They don't. They might be able to share some good stuff and might be helpful, but just beware of anybody who's trying to sell you something for money that is the perfect answer. That's probably or it is fraudulent, because there hasn't been a perfect indicator out there yet. So indicators at their heart, what they do is they're technical tools that help distinguish between noise and an actual event. Okay, so what is that? So an actual event is something that's real, something that's happened either with a company or an organization or a currency or globally, whatever it might be. Something's happened in a broader sense or specific to that security. And it's a real live event that's going to make a change that's going to happen with trends, whether they're going up or down or sideways. Something is a real change versus noise. Noise is things that are not dramatic, and it does not change the overall trend. It might cause it to blip up and down a little bit, but it's not going to actually dramatically change the event or change the trend, where an event definitely is dramatic and changes the trend, or it might strengthen the trend to have it continue in a strong manner, whichever way it is. But it's not a temporary thing like noise might cause. It's a real thing. So that's the difference between noise and events. And indicators help us to separate that out, so we can kind of tell what's true and what's false, and what might be really the core things that we want to focus on as far as making our buying and selling decisions using indicators when events happen.